Today, I'm excited to welcome Michael Anton Fischer, co-founder of Opago Pay and author of Bitcoin Nation. Welcome to the Bitcoin Edge, Michael.
Thanks for having me. Glad to be here.
It's great to have you. So before we get to Bitcoin, tell us a little bit about yourself, where you're living, what you're doing with your time.
Yeah, I live in beautiful southern Bavaria, right on the border to Austria. So next big city is Salzburg, Austria. That's famous for being the birthplace of the famous composer Mozart. And yeah, originally I'm an engineer by trade, but I had always had a great interest in economics. But by the time I finished engineering and wanted to continue studies into economics, I had learned both too much about how the world works and Austrian economics to be able to do an official degree in economics, because it just always I visited like the first three lectures and always found myself thinking like, that professor is just talking nonsense. So then I went in and did basically a self-study of economics, and I'm really I came in touch with Bitcoin very early because I worked in basically cryptographic cybersecurity technology, and basically already 2011, 2012, my colleagues brought me in touch with Bitcoin, but I didn't really understand it because I didn't understand the economics. And then at one point I read 100-year-old books from German economists. He wrote under the pen name Argentarius. He was one of the few guys who actually predicted the hyperinflation in 1923 in Germany. And his books, even though he didn't mention Bitcoin 100 years before it was invented, but his books really kicked me down the Bitcoin rabbit hole, made me understand why gold always has these cycles with fiat, basically devaluation, paper backed by gold or gold certificates, and then in the end, unbacked fiat money, and why Bitcoin really fixes this. And then I started tinkering more in the Bitcoin space, and with all the feedback I got from the market, from Bitcoin plebs who were trying to orange pill businesses, I then came up with the product idea for the Opago POS. And then in the end, I gathered a team and we founded Opago. And right now we're trying to onboard as many businesses, large and small, onto Bitcoin as possible. And really, we're trying to really make it easy for Bitcoin. So for small business, we have this easy POS device. And for large businesses, we have an API, and we're really trying to make everything as smooth for the business as possible, especially the tech side, which is quite difficult in the EU in general and Germany specifically.
So Opago is a way for people to pay in Bitcoin.
Yes, exactly. So we basically non-custodially facilitate the payment. So basically we help the businesses with the really getting the Bitcoin in, and we then forward it to the wallet of the business. And the beauty there is that basically the business can have a custodial wallet if they like, any wallet really that offers Lightning addresses or static payment addresses that you can always send payments to. But it could also be the merchant's own node. And we really make sure that our node is always up, always well connected, has the channels. So even if there's temporary issues with a merchant's own node, or even if he has a node on the phone, for example, with Zeus, then we take care that the merchant can actually keep his business running. We confirm the payment and then forward the money as soon as his node is back online or has enough liquidity again.
Wonderful. And at the moment, this is only available in Europe, not America yet.
Yeah, we have a few beta customers outside, but with all the regulations right now, officially we're operating in Europe with regular customers. And as I said, we're testing with other customers outside, and will expand as fast as we can.
Well, that's very exciting. Well, let's go back to your Bitcoin journey, because you were unusual in that you went to economics classes and thought from obviously quite a young age, this doesn't make sense. Most of us kind of believe what we're told. So how was it that you thought there's something wrong with what they're telling us?
There was really 2 points about it, but the biggest point is I had engineering training first. And in engineering, you learn to analyze systems. And basically, what I learned as an engineer, if I transferred it to economics, it just didn't work out. And in the end, I'm a proud engineer. So when my engineering knowledge says economics is false, I trust the engineering knowledge, not economics, to be honest.
So, what stood out the most? Was it the way that governments are printing money? Was it fiat system? What stood out to make you say there's something wrong here?
Yeah. So one point is that I realized that basically if you did a so-called black box analysis, basically every system, like an economy, is a regulatory circuit. So you can basically say, okay, take out all the people, just say, okay, what goes in and what comes out and how much delay do we have? I don't know what happens in it, but I see if, for example, I raise interest rates, then 6 months later this happens overall. And really there's a rule in engineering: if you have such self-regulating systems that are relatively stable, you don't want to touch them, especially if the parameters you can affect have a long delay to the output, because then basically you're always chasing the system, and in the end you usually end up making it more unstable than it is on its own. And that's really the thing that's stuck out to me when I thought about what the central banks do, that I realized that basically if I drew up a black box problem, really I transferred it, removed everything that says, okay, this is economics. If I just transferred the parameters into variables, the time delays, and just gave this to any competent engineer, any engineer that would see that system in a black box analysis would say, don't touch it. There's no chance that you can make it more stable or better if you touch these parameters. With how little you know about what's going on, with the very long delays between you getting your data, you regulating, anything changing on the output. So basically, no competent engineer, if tasked with optimizing an economy, would suggest a central bank. They would all say, no, 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 just leave it as is. Keep it constant, just let it run. You cannot improve it. And that was really one of the first things where I realized, hey, this cannot work. And then basically I read the books by Argentarius, especially the ones like On Money, written in 1921, and the subsequent books written between 1921 and 23, where he basically followed the hyperinflation unfolding and then followed the collapse and explained it, and explained also what the politicians are saying, why their arguments were wrong, what was happening. And the crazy thing about it was that essentially, with minor changes, almost all his letters could have been written today. It's not only that we're making the same mistakes again, our media, our politicians are sometimes almost ad verbatim using the same arguments to do the same things as then. And really the thing that stands out most is he explained about the housing crisis in Germany at the time. I mean, it was less than half as many people as today, and already they had a housing crisis. And he really explained why it was the rent controls, the price controls, the building codes, all these regulations that led to this housing crisis and made it go worse and worse and worse. And today we have the same situation. We have double the number of people, but the country is not full, right? You have a lot of space where you could build. The issue is really that we're doing exactly the same thing that didn't work back then, and we're doing it again, even though just 100 years ago we already tried it and it didn't work.
Yes, humans tend to repeat our mistakes. On your website, you quote the book The Essence of Money, which is the one you're talking about. And there's a quote that says the decline of its currency is probably the greatest misfortune that can befall a nation. Even a lost war does not bring its such serious immediate damage as the ruin of a monetary system. So, what you were saying about this 100-year-old book is that back then he was in favor of the free market, and that any controls that we put in the free market, like you mentioned, rent and other controls, leads to decline.
Yeah, exactly. I mean, money is the foundation of society. And like you cannot build a skyscraper on sand, you cannot build a moral functioning society on bad money. And the eerie thing is, he wrote 100 years ago that this crisis befalls a nation approximately every 100 years, or when all the people who witnessed the last time have died. And he wrote that 100 years ago, so we're due for another round of it. What's different this time is really, I mean, he described really how the gold standard was flawed and how paper money worked in international markets against a gold standard, and how that really also brought down paper money relatively fast. And now we're in a situation that never happened before in human history, where all the world is on a paper money standard. And really, the next comparable thing where really the largest economy in most of the world was on fiat money was back when the Roman Empire fell. So it's really been 1600 years since we had a similar situation, but we never really had a situation like this. So it's really hard to predict what will happen in the future. But even if you look at the past, I mean, you mentioned that he said that such a monetary crisis is worse than war. You have to keep in mind, he wrote this from a country that just had lost a war. So he really knew what he was talking about.
Yes, quite a visionary. You mentioned that most engineers, good engineers, would see that this fiat system doesn't work. Why do you think more people don't see it? More engineers?
I mean, I think generally one of the issues in our time is that, and this is also something that has to do with the incentives of the monetary system, we have this hyper specialization, right? So basically, the engineer is highly focused in this very narrow field of engineering and never looks left or right. And if he hears about economics, he's usually like, okay, this is the economics expert, and he tells us, and he seldom, very few people actually say, okay, how does my knowledge apply on that field? And this is what I found out am good at, and what I monetized in my career, that I actually can do this transfer knowledge and basically made a career out of it. But it's unfortunately something that's neither incentivized in schools nor really taught nor emphasized. In fact, the whole PhD professorship system actually incentivizes the exact opposite. The more narrow you go, the more likely you are to make an academic career.
Yeah, that's interesting. In Germany, you use the euro, and the euro is a better currency than many others. Obviously, third world countries are having a much harder time. What made you see that even in Germany, this is affecting you more than it should?
I mean, better currency than for whom is always the question, right? It was working well for Germany economically for a while, but I also have many people that I know and like in Italy, and for them it was the exact opposite. Really, they were growing, and the euro came and they went downhill. So this was really Germany briefly benefiting at the cost of most other European countries from the euro. And so from being empathic, I could say, no, this is not good. Basically, we're plundering the rest of Europe. But as is always with such systems, the nation that benefits most from fiat money at first, usually when it then claps back at some point, also gets hit the worst. So it's really this is, I think, in the Triffin dilemma, what's always overlooked when they say, yeah, the US is benefiting so much from having the dollar. Yes, that is, as long as they can print as much and the world laps it up. But as soon as that trend reverses, they get the last 50 years of fiat money spread out to 7 to 8 billion people back at once on their 300 million people.
So, how do you think that looks for the US?
I mean, I have written in articles that I think that really the only way out for the US is to actually um, do a reverse of 1971, but they cannot go back to gold. No chance. They don't have enough gold. So really the only option you have is go to a better money than gold, and that's from my perspective, of course, only Bitcoin. And this is also one of the points why I founded Opago, because I think that the Lightning Network is almost as revolutionary as Bitcoin itself, because Bitcoin solves the problem that we have had for 5,000 years, and I know it at least 3,000 years ago, the first Greek philosophers explained why a monetary system needs a stable amount of monetary units. And gold for 5,000 years was the best solution for that problem. We just didn't have a better technology, or rather the gold-silver bimetallic standard. Only in 2009 we got Bitcoin, which addresses exactly the downsides of gold as a base money. But still, the issue as old or almost as old as the base money was always how to quickly and internationally transact in a money. And gold is very bad at that, which is why certificates were invented in the first place, really, to even, I think it was in the 11th century. That's the furthest back record that I found, where basically the Templars used gold certificates because basically it was much safer and easier that you deposit your gold back in France, say, you ride as a crusader to the Holy Land, and there you hand in your certificate because you have theft protection, you have loss protection. There's lots of things that certificates improve on gold when it is used in international directions. But with gold, you then cannot verify that the actual amount of gold that the certificate certifies is actually there. That's really the issue, how always in gold you have this backdoor, because it's impractical in daily use to actually verify that gold is fully backed. Even if you use a coin, if the mint gets corrupted, it will be a long time before you realize as a normal citizen that, oh, actually there's more and more and more copper in our coins. So Bitcoin solved that, but still with the base network, you cannot internationally transact, especially not that as fast as you need it in this modern digital economy. And basically then Lightning came in and solved that as well. And I'm really convinced that in one or two financial crises, banks will rely on the Lightning Network to settle between each other. And what my goal is, I want as many private sector, small businesses, medium-sized businesses, large businesses to front run the trend, right? To get on a Lightning Network, because the earlier you're in, the more benefit you have, as with each breakthrough technology, and especially with Lightning. Lightning is fully and verifiably backed by Bitcoin, but that doesn't even mean you have to transact Bitcoin over Lightning. Thanks to taproot assets and other technologies, you actually can transact stable coins, other tokens, even tokenized assets over the Lightning Network. And that's really what I think will drive the adoption of Lightning first. I think the Lightning Network will really be the Trojan horse that leads to Bitcoin adoption. I expect that in 10, 15 years, many companies, banks will use Lightning, but not necessarily yet account in Bitcoin or think in Bitcoin. But Lightning will really be the infrastructure, because the current interbank settlement is very, very expensive. You can do it much cheaper on Lightning, and it relies a lot on trust. And that's great for banks and financial institutions as long as everything runs smooth, right? Because if they essentially give each other constant credit, they don't actually have to have the assets. They can leverage it higher. They can make more money. But the more leverage, the bigger the risk. And what happens when banks lose trust in each other is what we saw in the great financial crisis of 2008. And right now, the situation is the same as in 2008. So even worse, banks are much deeper in the reds if you account for the actual current value of all the bonds than they were back then. There's from my perspective, there's no mathematical way how not each financial crisis will add more and more zeros. And right now, it's still possible to bail out the banks. But if you say, okay, man, next financial crisis will add 1, 2, 3 zeros, and the next will add again. And at some point, I think it will not be possible to bail the banks out because simply people realize, hey, wait a second, these bailouts are 10, 20, 100 times the GDP. How is this possible? Where does the purchasing power come? And that's what Argentarius so brilliantly described in his book. This never goes linear. Even in Germany, back in like 1921, I think the mark to go to the dollar, the gold back dollar back then was, I think, like in the 100 to 200 mark range. And even in, I think, spring 1923, it was still in the $1,000 range. So it had 10x. But then in autumn of 23, it went, within a few weeks, it went from the thousands to the billions, trillions, and just endless zeros until people said, no, stop, we don't accept this anymore. And then they basically went back to a partial gold backing, and within a week, it stopped. So that's really how these things always go, because in the end, when you have once you have a fiat money, there's only three strategies that governments have to tackle it. They can go to war to actually get natural resources to stretch it a little bit longer. They can print more money to basically keep everybody quiet, give the money, pay off the debt with newly printed money, inflate away the debt, or they can have a monetary reform. And both war and printing money are only basically stretching the chewing gum. They're only postponing the problem. But in the end, all fiat monies have ended with monetary reform and a sounder monetary policy, either cutting back the zeros and saying, oh, no, now we have a tighter fiat money again. And in the long run, always they went back to gold-backed money. So I would be surprised if there suddenly is a new option, because so far it hasn't materialized ever. And I have not heard anybody propose a way out other than basically continuing this step cycle, boom bust cycle, going up, more zeros to the money supply, until people just say, no, stop, this is not funny anymore. We don't tolerate it. Because in the end, I hate when economists say that money basically relies on trust. Because normally it's the other way around, right? A good monetary technology builds trust, and that's why people use it. And then basically you abuse that trust by manipulating the money. And as long as you can keep the trust up, or at least sufficiently high enough, you can keep that scam going. But normally it's not like, you don't need trust to have a money work, but actually a working money builds trust and you can then manipulate it. But that trust erodes gradually and breaks suddenly. And that's, I think, what we'll see. And I'm trying to basically build out the technology and Lightning, or help build out the technology and Lightning, onboard businesses, and really help everybody basically get on the new ship before the other one completely sinks. And we at Opago really are focusing on physical businesses, because these days everybody is really focused on online. But in the end, you need people that produce goods and services, people that sell goods and services. You need the actual real people. And this is why we said, okay, there's lots of companies that are doing online, but we really focus on the actual businesses.
Yeah, just to reiterate what you said, eventually enough people will be tired of this excessive printing of money and they will realize something is wrong. And with better systems in place, because we all know that in order for Bitcoin to fully get adopted, it needs to be adopted as a payments rail, and it needs to be relatively easy. And Lightning makes that happen. Like we've often said, most people don't know how the internet works. It just needs to work. So more people will come to Bitcoin when there's ease of use, and also when they see the problem of how fiat system is eroding. And that's partly due to the Cantillon effect, right? Which you also talk about, is this system greatly benefits the people closest to the money printer.
Yeah, before we go into the Cantillon effect, I would like to say something on the general economic situation, because while I think that if we go on for a few more decades on this fiat system, it will inevitably have very horrible consequences. I think there is still a slim chance that we actually build out the better system fast enough, spread it fast enough, that collapse doesn't need to happen, right? Because essentially Lightning and Bitcoin, but specifically Lightning, even in the fiat economy, has so many technological advantages and cost and efficiency benefits that I think we can outcompete the current system as is, even if it wouldn't collapse. So I think really Lightning is the better payment network and Bitcoin is the better money. And this is what we're trying to prove at Opago. And if we go into the Cantillon effect, that's really something that even many advocates for sound money like gold don't fully grasp, is that basically when all the monetary units are spread in a economy, say you have 1 million gold coins, even if then somebody suddenly discovers a new gold deposit of another 1 million gold coins, that has the same effect as if you printed money. Really, it's not the gold atoms that back gold. It's really that it's hard to mine more gold that keeps the supply relatively constant, that makes it work as a money. Really, the constant supply is the key part, because if every person in the economy has, if all the 1 million coins are around, nobody's adding new coins, then the only way that any person can get a coin is by providing to another person a good or service that person values more than the money and gives him or her the money. But as soon as somebody can add new money units, that person has a completely different way of getting the money. And I always try to explain this with like King Midas in Greek mythology. He had the ability to change things to gold with touch. And basically every person on the island of Crete has money and gets that money only if they provide a valuable service. But King Midas, he doesn't have to do that. He just touches something, it turns to gold. So he gets money easier than others, because everybody else gets money only if he provides value. He gets it essentially for free, which means that he can buy everything he wants, because he can outbid anybody else, because he doesn't care. He can just make more money. So basically the price of all the goods that he desires go up. Then those supplying him obviously get paid more than other merchants, so they can bid more for the goods they desire. And that's essentially where the Cantillon effect comes from. This is just because a person is there that has easier to access to money than everyone else. And this essentially leads to the Cantillon effect that moves purchasing power, since the most powerful and richest are usually the ones controlling the money. So the Cantillon effect really moves purchasing power from the poorest to the richest. And when a central bank says, I do 2% inflation, really what they say is, I want to move 2% of purchasing power, or rather more, but just to keep the numbers easy, from the poorest person to the richest person. And something that even some fiat critical economists then get wrong is, and they say, okay, so the target should be zero inflation. But the natural trend of any economy is we get more efficient, we get better at making things get better with new technology. So the normal trend and really the purpose of all the economy is to get more efficient, right? That our children need less work to have the same standard of living than we have. So technical deflation, prices going down over time for the same good, is the natural trend. This is the purpose of the whole economy. So even when a central bank would say, our goal is 0% inflation. Now let's don't talk about how they measure that, but even if they say that, really what they're saying is all the efficiency gains, all the productivity gains that workers achieve, we want to take that away from them and give it to the richest people. So 0% inflation target is still saying we want to steal 100% of the productivity gains from the poor people and give it to the rich people. And I think once you understand that, it's really hard to understand why, especially so many on the left side of the political spectrum, on the socialist side, are pro central banks, because essentially the central bank's target is the very opposite of the ideals of socialism.
Yes, that's a great point, and that's exactly what Jeff Booth says in his book. I don't know if you've read it, but he says that the natural state of the free market is deflationary,
Yes.
and that true deflation is probably minus 5%, because, as you say, technology and everything is always improving, and that should go to the people, but it doesn't. It goes to the people closest to the money printer. But most people do not realize that. In my experience, as long as they're doing okay in their lives, they don't connect that. Have you noticed that in Germany or with the people you
Yes.
know?
And funnily enough, that's also something Argentarius described in his 1930 book, Das Kapital. So basically, he used the same title that Marx used, but it's only 89 pages long. And in that 89 pages, he debunked both the capital theory of Marx and that of Adam Smith, so both popular theories at the time, and put up his own. And he exactly explained that, right, really, the natural trend of the economy and the purpose of the economy is to get it down. And what he said, what people get wrong about capital is they think capital is like money, gold, houses, but really, or others think capital is like ideas, labor. And what he said, no, capital really is ideas put into action to improve efficiency. And then you get capital out, money, goods, but really that's the capital stock. That's actually the assets you have. But the actual capital is like, for example, he uses a farmer. He says a farmer figures out how to more efficiently manage his land, how to improve the quality of the soil. So he then leaves to his son the farm, where the son has to put in less work to achieve the same output. And that's really capital. So he builds the capital stock, the better farm, with his ideas that he puts into action. And the issue with fiat money and the Cantillon Effect is that forces the farmer to stay in business, to basically erode his capital stock. Essentially, the way the fiat system is structured, the farmer has to degrade his land because he in the short term needs to increase profits and really drive output, even if it goes against his capital. So in that sense, the fiat money is an anti-capitalistic system. In the capital definition of money, it's always more money, higher GDP. But it actually erodes the capital stock. And that's why Arctarius explains that in the end, the Cantillon effect is also bad for the rich. Because the rich may think, we get more money and we get an ever larger piece of the pie, but the pie gets smaller.
So true. And that's exactly why we love Bitcoin. We love Bitcoin because it's based on the proof of work, and also because there's only 21 million, and many other things that we love about Bitcoin. When you found Bitcoin, did you get it right away? And what were the main things that we haven't mentioned that you loved about Bitcoin?
Yeah, as I hinted at already, I didn't, unfortunately, because otherwise I would have a lot of Bitcoin, because I got in touch on the technological side already in 2011, I think. But really, everybody gets Bitcoin at the price he or she deserves. That's I think a true statement. And I've not met a single person so far that really got Bitcoin but didn't have at least two approach vectors. So for me, it was technology alone wasn't enough to get it. I needed also economic knowledge to get it. And it's for most people I speak to, they have like two touch points, because it's just, money is so fundamental. It touches so many things and you cannot really get it if you don't have a broader picture, which is why PhD economists struggle with it, because a lot of the assumptions that they get taught in university are, I think, false. So they basically start with false premises already. And even if they question the premises, they often have such a narrow field of view that they cannot really get out of their point and really understand it, because they actually would need to look at other fields, physics, mathematics, engineering, to actually understand the problem. It's really they really have blinds on and cannot see what's left and right of their narrow field that they're studying. Which is, as I said, I've just last year when I was in a Bitcoin hotel in Blochingen, I spoke with a professor on finance. He was euro critical of fiat. He said 0% inflation should be the goal. But I think I didn't manage in at least an hour of discussion to get across the point why even 0% inflation is bad. So
Yeah, it's a whole different mindset and a whole new learning, because we've been told one thing for so long. How is Bitcoin adoption in Germany and with the people you know?
it's difficult to tell. I mean, with the 21, the 21 club, we really have many meetups, and many people when I go abroad tell me, oh, wow, you have such a strong Bitcoin scene in Germany. And there's also, I mean, at least by IP address, but many of these are like Hetzner and other hosters. But even by IP address, many Bitcoin and Lightning nodes are based in Germany. So it seems like we have a very strong Bitcoin scene, but on the other hand, often it feels like all the stuff is happening like in El Salvador, in the US, and everywhere. So I would say, like, I think policy-wise, we are far behind, but the people, I think, are realizing it faster, maybe even because of our past, because Germany, compared to England or the US, has that experience of the Weimar hyperinflation. It's still taught in school. It's still remembered. I mean, my great grandmother lived through that still, and in Eastern Germany they had the communism and the Eastmark, so they even more freshly remember what happens when a money breaks. So I think under the normal average citizen, we're quite advanced. And there's also very many businesses, small and big, that are interested. I heard, oh, it's already 1 or 2 years ago, I heard from a guy works with large DAX companies. He said to me that from his point of view, from his client feedback, he said that he believes that 1/3 of all DAX index companies already hold Bitcoin, but they usually do it in a sly way so that it's not actually public that they hold it. And we'll see if it's true, but I had talks with many big companies that are really interested. Many banks are interested. And I mean, even when I were in this year in Prague, Deutsche Telekom announced that they would be mining Bitcoin. So I think there's a lot going on under the surface. Yeah, just this week, there's also a new Bitcoin, basically lobby group being founded in Germany, in Berlin. And even one member of parliament is inviting us, and they have an initiative like Bitcoin im Bundestag. So they're basically bringing Bitcoin education into the German parliament. So I think it's going well. I'm just not yet. I think just we need to get still the education for the regulators has unfortunately a lot of room left to improve.
So, with your company and other companies like yours, we're developing another payments rail and system on the side, and that more and more people, as they realize the state of the world, will start switching over to the Bitcoin payments rail. And it's just going to be a slow transfer over to that system. Is that what you see?
I mean, like everything, it's slowly then gradually, right? Most technologies that are disruptive stay in this very little adoption rate for years or even decades. Then they reach like 10% adoption and then they go ballistic. That's always what happens. And we're far from 10%. So it's hard to forecast when that happens. But with Lightning, I think it will be in 10 to 15 years that it really is widely adopted. And when I talk to businesses, they realize if they say I accept Bitcoin, even if there's not that many people that pay with it yet, it has a positive effect because the most skilled employees are often also aware about Bitcoin and its advantages. Even like after the COVID shutdowns, hotels, restaurants, they all have trouble finding enough people, and especially motivated people. But Mark from the Bitcoin Hotel in Germany, for example, he told me ever since they rebranded to Bitcoin, they have much more applications than they can actually accept. And that's something I hear from many businesses when they say, hey, we're open about Bitcoin or we're accepting Bitcoin, they get more and better employees. And on the other hand, the Bitcoin plebs also are like, where can I pay with Bitcoin? And I myself do it, but many others do it. Hey, they look, hey, I go to the city now on a business trip or something or on vacation. Where can I pay with Bitcoin? And go out of the way to actually pay with Bitcoin. And also we realize this, we promote the businesses we onboard. And oftentimes we say in Twitter or LinkedIn, hey, we have onboarded this business, and plebs go there. We had this with like restaurants where we say, hey, we are onboard these restaurants, and then the basically the local Bitcoin meetup says, okay, next time we go there. And that's also what then spreads adoption, because the restaurant says, hey, cool. Just because I accept Bitcoin, I had now all these customers that I wouldn't have had if I didn't do it. They tell other businesses, and other businesses are much easier convinced of Bitcoin by a business who accepts Bitcoin and sees the benefits than by some random stranger or even company like Opago that wants to sell them something. And that's the flywheel that we're trying to spin up here, that really more and more businesses get on Bitcoin, get on Lightning, and then convince others. And what I also notice is that really businesses, especially if you're a small business, you necessarily learn more about the downsides of the current overregulated system than the average worker who just gets a salary in his bank account as like one bank account. Especially if you do international business. I've seen how hard it is to send money to Hong Kong or New Zealand and how expensive it is. And then you discover Lightning. It's like, okay, you send over a QR code or even just an email address with Lightning addresses, and the money is there, and you have a few sets fees if you self-host, and way less than with the fiat system if you use Lightning. I mean, even had an example where I saw a payment go basically from a euro account to a US dollar account, but over Lightning, because there's more and more companies like Strike or Galloy with their stablecoins that implement solutions where you can actually send fiat or stable coins to another stablecoin or fiat via Lightning. And oftentimes it's cheaper than using, for example, PayPal or other technologies. And that's really where you can shine, because Lightning is instantly settled, is so efficient that even if you want to send euro from Germany to somebody in, say, Texas in the US in dollar, it's already more convenient. It's sometimes cheaper, and in a couple of years, it will definitely be much more convenient and much cheaper than the current system.
Yes. And as Bitcoiners, we do like to support Bitcoin businesses. And maybe one day we'll have a website or an app of all the businesses that accept Bitcoin, because we all see it as a better system. We want to support the payments rail and the world that we want to see. I can see why they will support that.
One point that I want to make on this is that like there's still many Bitcoins who say don't never sell Bitcoin. And I think spending
Mm.
is not selling. And to grow Bitcoin, it has to become the money, the actual currency in the economy at some point. But even for those Bitcoiners that say, never sell Bitcoin, I see the trend, more and more competing exchanges, exchange fees going down. Companies like Strike offering, if you do a DCA, you even have zero fees after, I think, 8 days or something. That leads to, with all the high fees, that right now businesses are forced to hide even by law in Europe. They really are not allowed to say, hey, please use bank wire because that's 3% cheaper than PayPal. Right now, they're not allowed to charge that and say that to the customer, but many companies are fighting that in the EU right now. But even then, the Bitcoin has an incentive to push customers to the cheaper payment method, even if it's not allowed to show the user. And I think very soon, with more competition, with this all getting more mature, if you have Bitcoin, it will be just cheaper to send somebody that you have to pay in fiat the Bitcoin, and he gets fiat, than to sell your Bitcoin or earn some fiat, send that over, because at some point I think it will just be for the Bitcoiners, it will just be cheaper to just spend the Bitcoin directly, especially if companies start, for example, with cashback programs, which is something that we're working on at Opago, giving back part of the savings that they have by using Lightning.
And obviously, with the Bitcoin price increasing, that people getting paid in Bitcoin now are going to like that savings. I don't talk a lot about price, but that does bring people in.
Yes. It's hard to forecast the price. And yes, the higher the price, the more people are interested. But in the end, that you can flip the script, right? You can say, oh, now the dollar is down or the dollar is up. Others say it depends on what your base accounting currency is.
True, because the higher the Bitcoin price goes, usually means that there's more fiat money printed in the system.
There's a very tight correlation between global money supply and the Bitcoin price. Yeah.
Yes. So tell us a little bit about your book. Your book is a prediction of the future, right? Tell us a little bit.
Yeah, it has two parts. So I decided to is it really modernize the lessons from Argentarius, and really in the first part explain explicitly how all that I learned from him applies to Bitcoin and why Bitcoin solves the issues with gold and fiat money. And in the second part, I then try to project really in the future, how will a society built on the internet and Bitcoin be structured? Because I think that humans always think we're very creative, but the technology we have available really shapes our limits. And there's very few people in history who have been able to break these limits and bring us to a new level. Like Einstein or Nikola Tesla. You can't argue Elon Musk right now. No matter what the times throw about them, they have new ideas. They really shift humanity to another level. But overall, society is really constrained. We have these up and down cycles, but they're really constrained by technology. And then we have a new technology, so we move to a better standard, and our cycles go in that new paradigm. And what I think with the internet, with Bitcoin, with Lightning, we are now able, I think, to break this 2000-year paradigm of organizing a society on the Roman system. Because essentially our societal system is still very heavily borrowing on the Greek and Roman law systems, state systems. And I think that was the best organization we were capable of for 2000 years. But now we have a new technological paradigm, and I think that will, over time, really shift how society is organized.
So we're coming to the end. Tell us, how has Bitcoin changed you?
It's changed me in many ways. I mean, for one, I was very left-leaning, green socialist before understanding economics. And then I realized, so wait a second, actually, the freer the market, the more you can achieve the goals of socialism. And the second one was my time preferences shifted a lot. So I used to think about really like, oh, I want this. And now I'm really thinking about, okay, how long do I time lock this Bitcoin for my daughters, or even hopefully sometimes the children of my children and so on. So really the focus has shifted. And also this is always funny when I talk to economists or other people very rooted in the fiat system, right? When I say in the short or medium term, I usually talk in years or decades, and long term is like centuries. And they're like, the long term is next year or in 5 years max. So this is really interesting because these words, right? If you look at the traditional Wall Street exchange, they're like, okay, what's happening this quarter? What's happening this year? And 5 years rarely enters the picture. But the more you go into Bitcoin, the more you're like, yeah, next decade is basically tomorrow. So you really shift your horizon. That's again back to what Argentarius said about capital, right? Fiat money forces you to get shorter and shorter to really contract the capital stock, and sound money as a sound foundation of society allows you to look further in the future and to say, okay, what am I doing? I'm trying to improve technology so my children, my grandchildren, my great grandchildren can easier have the same standard of living than I have and have an ever higher standard of living. And in the end, the ultimate goal of capitalism, of the free market, is that at some point it's so easy to produce that essentially you can have what today a rich person has with barely any work or even no work at all.
Gives us hope for a better future. I love that.
Definitely. Yes.
Thank you, Michael, for joining me today. Tell us where people can find you.
Yeah, thanks for having me. Yeah, you can find Opago at opago-pay.com and myself at michaelantonfischer.com. Just my name, no spaces, no special characters.
Thank you so much.
Thank you for having me.